Welcome back. You're still watching Power Breakfast, and let's talk about what's on everyone's mind this morning. India's largest ever public issue, the 18,300 crore Paytm IPO, is set to list at 10 a.m. today. Yash Jain joins us to tell us a little bit more about the issue. Yash.
Well, the day has finally arrived. The biggest IPO Indian capital markets have ever seen. Paytm's 18,300 crore offer is set to list on the exchanges today. As I said, 18,300 crore is the total size. 10,000 crore would be the offer for sale, which would go to the selling shareholders, and about 8,300 crore would be raised through issuance of fresh equity. That is what will come into the company. The price band for the IPO was set at about 2,080 to 2,150 per share, and the company is expecting a post-listing market cap of nearly 1.4 lakh crore rupees. Now, how does Paytm use this particular money which it raises? The company says that it would be using about 4,300 crore rupees towards growing and strengthening Paytm ecosystem, and about 2,000 crore rupees towards investing in acquisitions and strategic partnerships. Speaking about the subscription numbers for Paytm, they were certainly not as impressive as the size of the issue. The offer managed to scrape through on the last day with a total subscription of about 1.89 times. The QIB portion subscribed 2.79 times, HNI subscribed at just 0.24 times, and finally retail subscribed at 1.66 times. Another interesting fact was that 99% of the bids under the QIB category came from FIIs, and 86% bids under the HNI category came from individuals other than retail investors. A quick look at the positives for the company. Paytm is India's leading digital payment service platform. The company has a huge customer base of 333 million and about 114 million annual transacting users. Finally, it has 21 million registered merchants. If India's mobile payments between FY21 to 26 is expected to grow at 5 times, then Paytm would certainly be the biggest beneficiary. There are also some concerns as far as the issue is concerned, and important to highlight, the company is loss-making and has incurred negative cash flows in the past. The second concern, as per many analysts, is that majority of the revenue is earned from a single business, that is payment services. And finally, the most important thing, valuation. The stock is demanding valuation of about 49.7 times FY21 price to sales and about 23.1 times FY21 price to book value at the upper end of the price band.
All right, Yash, thanks a lot for getting us all of those details and numbers. Remember, the grey market premium for Paytm indicates a bit of a tepid listing. So let's see how the street takes this mega IPO and the mega listing that we are going to see today. But with that, we move on to our commodities segment. Manisha Gupta joins us with an update. Manisha, it seems like there's been quite a significant drop in the crude prices.
It is, Pavitra, yes. 3% of a decline overnight, and we are down by 5% now in the previous week itself. The crude oil prices as of now are now trading at a 6-week lows, and we've seen $80 break quite easily on the lower side here. Various things. Well, the major one is that the U.S. is asking China and Japan to consider a coordinated release of oil reserves. The U.S. itself is considering oil release from the SPDR reserves, and that seems to be weighing in. This would mean that a lot of oil could come into the market. Remember, this hasn't been agreed on as of now, but the way all of these countries have been talking about more supplies required, this perhaps could be the next step. The markets also do believe that the next couple of months are going to be critical, but after that, OPEC and IEA both have said that the global inventories or the global supplies will increase. So the crude oil prices in the near term and the longer term are headed on the lower side, is the view coming in from the global agencies as well, and that seems to have marred the sentiment.
All right, Manisha, thanks a lot on getting us that quick update on the crude oil prices. With that, we're completely out of time on this show. The SGX Nifty is just around 10 odd points lower, indicating quite a flat start for our markets. We wind down on